In this video, I'm going to guide you through a fascinating premium indicator known as the oscillator matrix. Imagine having a toolkit that combines over 6 unique components, each designed to work seamlessly together. This isn't just any indicator, it's a powerhouse for trend following and detecting market reversals. Picture this: you can use this indicator in multiple innovative ways. For instance, imagine spotting excess money flowing into the market while simultaneously receiving strong reversal signals. Or envision getting real-time divergence alerts when there's a lack of money flow, helping you predict upcoming trends with remarkable accuracy. Why is it called the oscillator matrix? Think of it as a complex puzzle made of diverse pieces that come together to create a systematic approach to market analysis. While it's robust enough to stand alone, it also excels as a complementary tool to your primary analysis, with or without other LuxAlgo premium indicators. Now, let's dive into the heart of the oscillator matrix. To make this journey effortless, I'll take you through each component step by step. So, let's start by heading over to the settings and disabling all the elements related to the Hyperwave section. What you'll see remaining on the chart is the smart money flow. This category is key and contains 3 distinct components. First, we have the reversal signals. These signals operate independently from all other algorithms within the oscillator matrix, offering unique insights. Next, there's the Confluence section. This part of the indicator gathers information from all the components and visually represents them at the top and at the bottom of the chart, showing you whether the market conditions are bullish, bearish, or very bearish. Additionally, there's some extra functionality we can explore later, such as the Confluence meter, which provides even deeper insights into market conditions. But for now, let's dive deeper into the smart money flow. Imagine these green and red waves as the heartbeat of the market, signaling when money is flowing in or out. The basic premise here is straightforward yet powerful. Green waves indicate money pouring into the market, while red waves show money steadily flowing out. Start your analysis with this fundamental piece: understanding the money flow. Recognizing significant inflows or outflows of money gives you a solid foundation. The next components of the indicator build on this by helping you catch reversals or predict upcoming trends. What makes the smart money flow category exceptionally powerful are its numerous components, each offering detailed insights into the market's financial movements. Among these, my favorite feature is the thresholds. These lines highlight where substantial money would be entering or exiting if the money flow approaches them. When the money flow is significantly far from these thresholds, it indicates that the market is likely ranging. This visual cue provides an instant read on whether the market is trending or in a range, making your analysis more intuitive and effective. Let's compare this with 2 specific examples where the money flow dips below the threshold line and consistently hovers near it. Notice how the money flow interacts with the threshold, repeatedly touching and rebounding from it. This pattern signals significant selling pressure. Observing this interaction before a large downward impulse gives you a valuable heads-up about a high probability of such a move. The same principle applies to upward impulses. When the money flow interacts with its threshold and you see the threshold itself rising with the money flow, it indicates extremely bullish price action. This is a strong signal that a significant upward impulse is likely. In the example here, you can see this in action with a nearly parabolic move to the upside. These visual cues from the smart money flow provide you with actionable insights, allowing you to anticipate significant market movements with greater confidence. Now, you might have been curious about this lighter wave visible on the chart. This wave represents overflow, indicating an influx of excess buyers entering the market. The strategy for trading with this overflow in your analysis involves monitoring for its discontinuation. When this overflow stops, as it did right here, it signals that the buyers have likely exhausted their momentum. At this point, you should be cautious about expecting any further upward impulses unless there are clear indications on the money flow suggesting otherwise. It's as if the market needs a moment to reset or a significant reversal is imminent. You can observe this phenomenon on both upward and downward movements. For instance, once the overflow ceased here, it indicated a potential pause in upward momentum. Similarly, on the downside, the end of overflow suggests a halt in selling pressure. By paying attention to these overflow signals, you can better anticipate when the market is likely to reverse or take a breather, enhancing your trading decisions. As the market was bottoming out, you noticed an overflow of selling pressure. Once this overflow completed, it signaled that the sellers were likely exhausted. This gave us confidence in anticipating a larger reversal, which is precisely what unfolded here. A significant upward impulse began as soon as the overflow ceased. Contrast this with the previous downtrends where no overflow was present, indicating that there were still substantial sellers in the market and a low probability that the bearish trend was over. Now let's head back into the settings and enable the Hyperwave oscillator along with its real-time divergences. This addition will enhance our ability to analyze price action. With the Hyperwave oscillator enabled, you'll notice the blue and purple ribbon on the chart, along with real-time divergence lines appearing in green for bullish and red for bearish divergences. This oscillator is designed to display market momentum, making it invaluable for spotting potential upcoming impulse moves and trends. Combining this oscillator with our earlier analysis of the smart money flow category creates a powerful tool. The Hyperwave oscillator's momentum insights complement the money flow signals, providing a more comprehensive view of the market dynamics. This synergy is exactly what this indicator is designed to achieve, giving you a robust framework for analyzing and predicting market movements. When the oscillator is moving below the 50 level, especially dipping below the 20 level, as indicated by the values here, you can expect bearish price action, similar to what we see here. If the oscillator holds in this lower region, it signals a bearish trend. While there might be counter signals during this period, focusing on high probability reversal signals is key. For instance, notice the overflow combined with a large reversal signal at the bottom of the oscillator and a bullish divergence. These factors together can give you confidence in anticipating a significant reversal after a bearish trend. On the flip side, for bullish trends, look for the oscillator to hold above the 50 level. When the Hyperwave oscillator stays in this upper region, it's likely that bullish impulses will follow. For example, after a bullish divergence here, the oscillator began coiling upwards, crossing the 50 level. This movement occurred before any upward impulse, providing a clear indication that a bullish move was imminent. This confidence is further strengthened by the fact that the money flow was near to its threshold, signaling a strong move to the upside. Additionally, let's delve into these reversal signals. You can incorporate these signals into your analysis alongside the money flow and divergences we discussed earlier. For instance, observe the overflow here. As soon as it ceases, it provides an early indication that the market might reverse to the downside. This happens at the very top of the impulse, signaling a potential shift. Following this, the money flow drops below the threshold and stays there. At the same time, the Hyperwave oscillator turns over, indicating a shift in momentum. We also see a significant reversal signal occurring right at the peak. Combining these indicators, money flow dropping below the threshold, the Hyperwave oscillator turning, and the active larger reversal signal gives us a strong case for anticipating a downward move. And what happens next? We witness a substantial impulse move to the downside, validating the combined analysis. So, that's the general process of utilizing all the components in this indicator to interpret reversal signals and identify potential trends. And now let's talk about the bars on the top and bottom of the oscillator. These bars are designed to simplify your analysis by combining multiple features into straightforward indications. A bright red bar signals a likely downtrend, while a bright green bar signals a likely uptrend. These are known as confluence zones, which you can enable within the confluence section of the indicator. The beauty of these zones lies in their customization. You can style every single feature to suit your preferences, ensuring that the display aligns perfectly with your analysis needs. Additionally, you can adjust the settings of the reversal signals. If you find there are too many signals cluttering your chart, you can choose to display only the more significant ones. Moreover, pay attention to the small reversal dots. These indicate shorter-term price action reversals and can serve as early warning signs for larger upcoming reversals. By incorporating these dots into your broader analysis, you gain an extra layer of insight into potential market movements. Imagine a market moving in a very clean range, much like the one we're looking at here. Notice how the money flow isn't interacting with the thresholds at all? This scenario allows you to put more weight on those reversal signals to spot potential moves up or down, particularly for shorter-term price action. These reversal signals can also act as useful indicators for identifying local tops or bottoms within these established trends. Think about this. In areas where the money flow isn't particularly significant, we can observe how the market behaves. For example, you might see a dot indicating a potential reversal, the price dips, and there's some overflow. Yet, overall, there's not a significant amount of money flow entering or exiting the market. This indicates a stationary price area where the market is ranging. You can tell because the price drops, but the money flow doesn't really move into the red. It remains fairly stagnant in the green. This illustrates the importance of first analyzing the money flow to understand the general buying and selling pressure. By identifying the actual market conditions before considering reversal reversal signals, divergences, and the Hyperwave oscillator, you position yourself for a more accurate market analysis. This step is crucial to making informed trading decisions, ensuring you're well prepared for any market movements. Now for the last part of today's video, let's introduce one more very powerful tool, the Confluence meter. Imagine a dashboard that simplifies everything for you. This handy tool quantifies the alignment between various indications provided by the oscillator. It takes into account several elements: the trend indicated by the hyperwave relative to its signal line, the trend indicated by the hyperwave itself, the money flow trend, overflow conditions, and divergences. When the confluence meter shows a higher measurement, it suggests a significant bullish confluence, meaning most elements point to a bullish trend. Conversely, a lower measurement indicates a significant bearish confluence. If you want to learn my best strategies for trading crypto, forex, and stocks, check out one of these videos right here.